S&P on track for its best week since June. Activity, though, under the surface suggesting stocks could be on more shaky ground. Jeff DeGraaf, chairman of Renaissance Macro Research, joins us now. It's nice to see you again. You have been pretty positive on the market. Has that changed at all?
No, you always want to be really careful on these calls, Scott, because it's really at the margin. It's more tactical than anything else. It kind of tells us how we want to play things. But look, we're still in an uptrend. We're still bullish. I think we'll end the year higher than where we are today. It's just a matter of the next 6 weeks are probably going to be a little bit choppy. And we say that because, we're not seeing the type of internal momentum that tells us to really chase stocks here. Just says we probably pause and catch a breath, and we want to use that weakness to leg into it instead of get aggressive on chases, particularly on things that have popped around earnings and the like. So that's really the genesis of the call.
What about the so-called lower quality nature of parts of this rally? I mean, what do the charts tell you we should be thinking about?
Well, I'll tell you, I just got back from vacation, and I went through a bunch of charts today, and I was really shocked. In fact, I was talking to my group about this, that there are a lot more shorts that I'd be interested in, getting on the other side of here than I've seen in, probably 6 months or so. And so probably longer than that, frankly. But it's everything from, say, Chipotle to Salesforce to Intuitive Surgical. Lilly just created a big top, even though I think it bounces. So I do think that this is a bifurcated market that's probably great for hedge funds. It's great for, stock pickers and portfolio managers. And I think there's opportunity on both sides of this tape. And that's the first time we've really seen that since the lows of April. And it's pretty typical. We're seeing this kind of fade of beta, if you will. And I think that's going to create a lot of opportunities between now and the end of the year for both sides of the tape.
Definitely more choppy since the massive rebound from the April low. That's obviously what you're referring to. I want to hit more on Lilly for a moment, if we could, because I referenced, without saying your name today on Halftime Report, of what you see in a chart that obviously has shown to have broken down. We can throw Lilly up here, and what you think might be the next move for a name that was, for a time, Jeff, grouped with some of the mega caps, because this market cap had continually gone up. And now we have some questions about certain drugs and results of studies, and this thing looks like it's heading in one direction.
Yeah, it is a big top formation. Now, I want to be very careful because from a tactical perspective, it's very oversold, and you could rally this all the way to 700, 730 really and not change the chart. So obviously that's a huge move, and I would not be pressing on a short right here. But it has created a top, and it's completed that top as you got down through that 700 level. And that's a big formation. That's not just something that's developed in the past few weeks. I mean, keep in mind, the 50-day moving average crossed below the 200-day moving average on Lilly in December, right? So we're talking about 8 months of technically a downtrend, if you want to use that as a barometer for trend. And it really is just, it is just continued to weaken. And I would say, and this is a problem for the stock, is it is now being lumped in with other pharma names, all of which have been weak. So it's very hard to own stocks that will do well if the group is poor. And now you've got Lilly, who is kind of the standout, acting a lot more like the rest of the names in the group. And I think that's going to make it extraordinarily vulnerable, not to mention it's probably overowned by every single portfolio manager out there because it was one of the hiding spots. So I think there's a lot more distribution to come. Again, I'm more interested in shorting it on a rally than I am right here, but I certainly think that the trend has been set and it's lower from here.
And it's interesting when you talk about Lilly being overowned from an institutional standpoint. I feel like Apple is the exact opposite, that it's been underowned by portfolio managers because it really hasn't done anything. You're not so convinced that the move that I'm looking at and our viewers are looking at right in front of our faces is something to really bank on. From Wednesday to today, this is not confirmation yet of any sort of meaningful breakout. Is that the bottom line?
Yeah, that's the bottom line. The relative performance isn't there. I think it's okay. I don't think you're going to lose a lot of money with it, and I don't think it's a disaster waiting to happen. But I just think there are better places to be. And you've had a weak trend, and we've obviously had some decent near-term momentum. But The trend is still weak, and what happens is you get this near-term momentum, which tends to create an overbought condition within the context of a longer-term downtrend, and those are usually vulnerable spots where the stock itself is likely to consolidate, pause, and probably weaken, reasserting the trend, and that's where we see Apple here.